Hey guys, so this is a video that I'm doing for the community because for those who have been following us for a while now, we actually do take considerations of what the community members want. So in this video, I'll talk about structures and alignment and how do we use confirmations, all right? So these are the most, I would say, widely seeked approach to the market. So what are we looking for at this point of time? 10 minutes, right? So yes, can you see this entire framework over here is bearish, right? Because we sweep the highs, we broke this level. Ultimately, we want to sell, okay? But we are only going to sell if the 15M shows us break. All right, so for example, when you track the highs of this move, it's just higher highs, higher lows, higher highs, higher lows. And there isn't any change of character just yet. And that's why we can trade the bullish move up until the 15M change of character, right? So where is the framework? It started from here, okay? We have this towards the upside. We have a 15M break over here. Follow the market structure, right? This higher high, higher low, higher high, higher low, higher high, right? This is the entire 15M block. Can you see this entire gray area is the 15M demand zone? Okay, so this is where retail traders come into play, right? They are looking for maybe a support and resistance or resistance support like this. Okay, here. Neckline support or whatsoever, right? Trust me, I've been there. So this was what I'll be doing back then. Just place a buy here. Stop loss beneath the low. Aim for the high. And yes, this is a 1:1.12, right? And yes, you hit take profit for 1:1.12. So now, what I'm trying to say is, you're going to align your time frames in a way where you can extract the most risk to reward from this market. So first of all, again, understanding that this is a 15M break, prices comes back to your entire 15M block. What you're looking for is to refine this 15M demand area, right? Look at this. This is the entire 15M demand. Okay, and if you're trying to refine this area, you could. And let's go and do it. Refine it to the 10 minutes. Can you see here? 10 minutes, huh? And then we are going down to lower time frame. So now it becomes a 8-minute inside bar. You can do it. But usually I like to cover the low. Okay, go down to the lower time frame again. So now this is the 5M. So can you see this 5M you wouldn't have gotten tagged into? And that is why you need to leave many POIs. You can do this. You can use the 5M here. But you have to understand that as soon as prices tags the entire 15M from here, this sell to buy, you are already valid for buys. And that's why you have to leave your order block over here. Alright. So now, going back to the 1 minute. So my 15M is pointing towards bullish. Okay, and over here I'm waiting for 1M to point bullish as well. Okay, so that I can align my lower time frame, the high time frame. So let me just remove all of this. Alright. So previously I did a video for my students, and over here I'm just doing one more to explain to the community members, right, what I mean by alignment. This is the first time that it changed character. Can you see? Took out lows, change character towards the upside. Now at this point of time, you can be a buyer here. Okay, depends on your entry model. If you are a 1M trader, this would have been your entry buyer limit order. And let's say you missed it. All right, you want to wait for another break. Okay. This is your second entry. Okay, so does this mean that prices is going to keep respecting 1 minute, 1 areas? Not exactly, right? Once it breaks a high, yeah, you're going to expect a higher time frame retracement. Okay, and this is why traders always get caught, because when they track the 1M order flow, you know, they're going to keep buying highs, buying highs, buying highs, buying highs, right? And all of this is going to earn you money until they fail to realize that it took a higher time frame swing high like this, and they start to buy here. It's the same thing. Can you see that all of this over here is the same, right? You broke towards the upside, you have a demand zone, you buy here, and this time it failed. Why? Because you took out a higher time frame high, and that's why you expect a higher time frame pullback. And this is where all your 1M demand zones gonna fail. Okay. So now let's just go back to what we are talking about over here. So when 1M broke over here, can you see that this is the demand? This is the entire 1M demand, right? So what did I do? I go down to the lower time frame because I understand that 1 minute change character already. So for me, I want to get involved in the 5 seconds time frame. Okay. So now, can you see the entire framework over here? This is bullish, right? And now this, and then again, this is bullish, right? And then again, this is bullish. right? Go down to the lower time frame. How did I get involved? So now, prices broke this high, came back down. On my entry time frame, it's bearish. Can you see this is bearish? And now turn bullish. So on my 5 seconds time frame, this now becomes bullish, right? Understand the entire framework again, right? Based on these rectangular boxes. This entire framework on the 15M is bullish. On the 1M, this is bullish, right? Once it breaks this area, this is bullish, okay? So my 1M is aligned with my 15M. And all I need now is my 5 seconds to be aligned with my 1M, which is aligned with my 15M. So now this is the 1M alignment. Came back down, top, took out low, take out high, right? Now my 5 seconds is, and this is where I got involved, right? I got involved here, right? This should have been an entry, okay? But can you see here, we have another chop, right? So let's say this is the 5 seconds. This is supposed to be your entry, right? But let's say you go down to the 1 second. Can you see what? Another bullish model. Right, this is the 1 second. Okay, so let's just go back, right? We have a 15M bullish model. We broke structure on the 15M. We have a 1M alignment. We have 1M in our favor. Go down to the 5 seconds. 5 seconds is bullish. Right, remember, this is a 5 second play. These 5 seconds came back down to your POI here. Okay, you see it's very subtle. Yeah, this is a 1 second candle. Came back down, sweeps the low, right? Took out high here. This is the entry, right? On the 1 second. So this was where I got involved. And typically your stop loss should have been the low here. All right, but this was too tight for me, 0.8 pips. All right, I'm going to put my stop loss beneath this low, right? For 1.5 pip stop loss. And this is where it ran. Okay, so this is how you actually use time frame alignment. And let me just sum it up for you. We always start with the higher time frame H4 break of structure like this. Okay, so now we have H4 break of structure, right? BOS H4. This is bullish on the H4. Prices starts to deliver lower. Okay, like this. So can you see H4 is already delivering bearishly? Because this is your H4 swing points, alright? So typically, if you want H4 to be pro trend, what you want to do is, as much as possible, you want to narrow down this. You want to wait for H4 to be bullish again, like this. So can you see how this entire framework or structure, from bullish, it becomes bearish here, and now becomes bullish. So now you are aligned once again. Yeah. Okay, so this is the bullish framework here, right? And then you have another bullish framework here. So now this is where your H4 align, because you took out lows, take out highs. Okay, so then again, this is a H4 chop. Okay, and now you have a demand over here. Let's say you have a demand here, and prices start to deliver lower, and this is where you are looking for 15M confirmation like this. Okay, so now you have a 15M change of character. 15M here. Okay, so can you see now this entire market structure is working, and it comes back down, it changed character. Your H4 over here is bullish as well. If you are using 15M as a confirmation, then now can you see your 15M is aligned as well? This is your 15M bullish. So now your 15M is aligned with your H4, which is aligned with the entire market structure. Okay, so 15M traders typically would have placed a buy limit here and just fire off buys like this. For example, okay, if you have a 15M entry model, this should be your entry criteria. So now for those traders who are working with the 1M and the seconds time frame, what you want to see is this over here, another demand area. For example, like this, and then what? Prices starts to come back, and you're waiting for a 1M chop like this. Now you have a 1M change of character. Can you see now your 1M is aligned with your 15M, which is aligned with your H4, which is aligned with your entire market structure. Okay, so this is your 1M change. Take out low, take out high, same thing over here. Okay, so now your 1M is bullish, and if you are trading on seconds time frame, this is what you're gonna see. Same thing over here. So now, if you are 1M trader, 1M is your entry model. Your entry should have been here. Stop loss beneath the low, like this. And then aim for highs, right? And let's say you want to play with the 5 seconds time frame. This is the demand. Prices starts to deliver lower. You want to wait for a 5-second change of character. Okay. Right? So you have a chop up now, you have a 5 seconds change. And this is where you get involved. Okay. Stop loss just beneath the low. And you're targeting highs. Right? Your TP1, maybe 15M high, 1:8, and then your H4 high. And there is where you are aiming all the way here. This is the next high, 1:35. And this is how you position yourself from a 5 seconds, which is in line with your 1 minute, in line with your 15M, in line with your H4, in line with the entire market framework. You don't simply just, look for H4 break of structure, and over here you start to look for seconds. You're going to lose money every single time. All right, this is how you use and piece the market information together, waiting for all your time frame to so-called align and tell you that you want to go bullish. And this is where you get involved here, right on the 5 seconds. Okay, so understand the fact that all of these can go wrong either way. Okay, you can have the perfect 15M shift, try to get involved here, and then get stopped out. And all of these will change depending on how the market is delivering price to you. And the problem with refinement is, let's say you are a 15M entry trader. You place a buy limit here. Stop loss here, and you aim for high. Right? This is the liquidity point. For example, 1:3, all right? It's not bad, okay? And then for 1M traders, over here, change of character, they buy here. Stop loss beneath. Aim for the high. This is 1:4. Can you see that the risk to reward increases? And then of course over here, if you can get involved here, it becomes 1:8. All right. So why wouldn't anyone want to go down to the lower time frame? Right? Because I'm getting better RR, and better confirmations. The truth is that, let's say 15M traders got involved here, 1M trader got involved as well. But as a 5-second trader, you may not get involved, right? Prices may just do this and starts to run. And you have been waiting for this entire setup to play out just to miss the entry, just to miss the trade at the end of the day. Okay, and that is what you get when you're trading with the lower time frames, right? You may miss the trade and it will never come back. And prices starts to run higher and higher. And this makes sense for the 1M as well. So let's say 15M traders got involved here. 1M trader wanted to wait for the chop, right? And didn't happen because you're waiting for demand here. Prices can easily run up and starts to deliver higher, meeting targets. And the 1M trader may not get involved as well. And that is what you need to deal with on the lower time frame. But the problem with traders who are working with the lower time frame is they start to FOMO and they start to buy high. They start to buy high, right? Over here, yes, we have a 1M entry model, right? We have a break over here, we have a demand here. But when prices breaks this high, remember, you expect a higher time frame pullback. This demand may not hold and start to come back down, tapping into some demand here before marking up and moving up higher. Okay, so this is how you actually piece all the market information together. So I really hope that you guys find true value in this video and leave your comments